Hello traders, this is Blake Morrow and you are listening to the week ahead video for December 6, 2020. I hope you guys are having a great weekend. Got a great treat for you today. We have Grega Horvat who's going to deliver you guys an Elliott wave perspective on the currency market, and probably is going to hit you guys up with some cryptocurrencies and maybe some precious metals. But before I get to that, I just want to mention, if you haven't tried out ForexAnalytix, this is the time to do it, because it is still the Cyber Monday sale and we still have that enacted. That means you can buy 1 month and get 1 month free. That's a good deal. It's 50% off. So try it out. And then after that, it's $119 per month if you use the premium version, or the light version is going to be $19 a month. And you get the mobile app with it. You get the chat rooms. If you have the premium version, you'll have the chat rooms. And that's where myself and the rest of the team's at all day long throughout the trading session. And you get so many great features, like this data flash. You get the risk management calculator, news feed from Live Squawk. You get integrated live charts from TradingView, all in one package on top of all this great analysis. So guys and gals, try out ForexAnalytix. We'd love to have you part of the community. And I'll see you on the F.A.C.E webinar tomorrow morning on Monday at our normal time. And remember, that is a free webinar. So if you want to join us every trading day for free, make sure you find the link in the description. And if you love Grega's analysis and you appreciate what we do, give us a thumbs up on YouTube if you're watching us via YouTube, and make sure you subscribe to our channel. And make sure you share this video with all your other trader friends. We'd appreciate that. All right, guys and gals, have a great remainder of your weekend and enjoy Grega's analysis.
Hello everyone, welcome to our new week ahead video. I will be here with you today. Blake is away, and I think that this update also is necessary. I've been away for the last 2 weeks, so I think that for those who are interested in Elliott wave analysis will find this video very useful. So firstly, we will look at emerging markets before we go to the currency markets. And what I'm looking at here is actually very nice rise here towards the upper side of a trading range. So despite this very strong rise, we should be aware that maybe at the upper side of a trading range, based on a simple basic technical analysis, we could see limited upside. Even if just temporary pullback, I think we should be aware, especially if we consider that market is very bullish because of vaccine, because of quantitative easing. But now keep in mind that if vaccine will really help us to get back to normal lives in 2021, then economy would also be expected to improve, and in such case maybe quantitative easing wouldn't be necessary anymore like it's now. So if investors will position themselves for such a scenario, then in fact we could see a reversal on the stock market. Okay, it's somehow also buy the rumor, sell the news impact. So we will see how this unfolds. Definitely I see markets at very extreme levels here, and I think it's much better, much safer to join this right after retracements. Also, if we take a look at this put call ratio index, you can actually see here that I'm here looking at moving average. It is actually inverted put call ratio. I'm looking at call put ratio because of much easier view here. So if this call put ratio is rising, then of course it means that traders are positioned long very aggressively because they believe that the price will be higher in the future. But always when you are moving into some extreme levels of these readings, then you should be aware that maybe this cycle is coming to an end, because after all, markets are moving from pessimism to optimism and vice versa. So what I'm looking at here is a moving average. It's a 5-day moving average of this call put ratio, and what I'm looking at is that we are now approaching towards the upper side of this range. Very similar levels that we have seen here back in February. So I definitely think that it's much better, if you want to be positioned on the long side, that you see a reversal here to the lower side of the range, and then maybe considering opportunities on the long side, especially from investment perspective. So I think for now, of course, trend is bullish, but as I said, we are moving into some extreme levels, so I think that it's good to be aware that we could see a pullback. Also, another market that we should track whenever we are considering risk on or risk off is definitely US dollar index, and I compared this one to the S&P 500. Okay, so it's actually dollar index S&P 500 ratio, and what I see here is that we can be moving here into the final wave here of this impulse away from March levels. So this chart actually suggests that yes, S&P 500 obviously is doing much better than dollar because traders are not looking for safety at the moment. However, we are in a fifth wave. We are at the extreme of this impulsive drop. So if we respect the Elliott wave cycles, then we should be aware that maybe this at least three wave rise will show up, and ideally this will be the case at the start of 2021. Let's see if we can let's see if this market can show some evidences of reversals in upcoming months. Also, everyone are talking about this Santa rally, but actually if we consider that 2021 is definitely totally different than any 2020 is totally different than any other year, and we are in fact already bullish on stocks now, so I would not be surprised if actually we will see limited upside as we approach the end of the year. So we should be aware of these cycles that could come to an end. So at the same time, let's take a look also on currency markets. Well, on euro dollar here, we are here trapped in ongoing consolidation away from 2016 lows. So either this will be seen as a triangle for a wave X, or maybe an ABC recovery, meaning that we could see break above 2018 highs. However, as you know, euro longs are at very extreme levels, very similar to the data shown back from 2018. So again, I think that we should be aware of potential slowdown in the upcoming month. So if we take a look firstly on a daily chart here, you can see that I can count ABC X ABC move here into this resistance. But before I can say that this leg is finished, okay, I need to see 5 sub waves within wave C, because wave C is a motive wave. But for now, that's not the case yet. So I think that there is room for more upside here, at least in the short term. So maybe short-term traders will look for some opportunities. Also, the non-farm payrolls report did not make any big change in these trends. I think that this euro rally could stay here in play for 2 more weeks or so. Now, another wave count that I'm looking at on this euro dollar, if maybe we will continue to rally here into higher wave C of this 3-wave recovery away from 2016 lows, is also here an impulsive recovery. Okay, it's a wave 1, you have a wave 2, you have now wave 3, you would expect wave 4 and then wave 5 to the upside. So even this wave count suggests that we could be now here approaching some resistance, because I can see prices making 5th wave within this wave 3. Okay, not to mention this alternate count where maybe this whole cycle is already at its late stages. But still, we definitely, before we may say that this market is coming to an end, we need to see a completed patterns. So on the 4-hour chart, still we need to see completed 5 waves up here before we may say that this market is ready to turn. So for now, clearly this euro strength remains in the cards, and I would be looking for potential change in trend only if we see a dip below 1.1920 area. Now let's take a look on cable. Now cable is again back at these highs here but still very important resistance in my opinion. There is no way to count this as an impulsive recovery, so I see an overlaps here, meaning that this could be a corrective price action. Also, if you take a look here on this structure, okay, on a lower time frame charts, you will have issues if you will try to count this as an impulse because of too many overlaps. So I think that even shorter term structures suggest that despite higher prices, bulls are not that strong, especially if you compare maybe this lag with the current rise. You can see that this one was much sharper compared to current one, meaning that bulls are losing strength, momentum is not that strong anymore, and we should be aware of a reversal. So we will see what will happen with the Brexit. Definitely we do not see any deal on that topic yet, and that's why maybe cable is facing some resistance here at this previous peak and already showing reversals at the moment. Of course, for any significant reversal or confirmed top in place, you definitely need an impulsive drop, I would say back below this 1.32 level. Now let's take a look also on the Aussie dollar. Well, Aussie dollar is moving nicely to the upside since market broke out of this corrective channel. It was a complex correction, so we are now making a new impulse, and this impulse in fact can already be coming to an end into the late stages as shown on the 4-hour chart. So you have waves 1, you have a wave 2, wave 3, wave 4, and looks like that you're now in a wave 5. Maybe slightly more upside, but technically speaking and also from a trading perspective in particular, I think that this pair is moving into some very important resistance. Always when you are also reaching a new highs, you should be aware that there can be new orders placed, meaning that flows can change. Okay, so just be aware of a free wave retracement before maybe we just continue for more upside. There's also a chance that maybe if I hide this wave count, there's also a chance that maybe this rise, okay, is now in wave 5 of first impulse here, and even this suggests then maybe that we could be slowing down here, but maybe for our much more important reversal and a pullback. Now for a long-term view here on Aussie dollar, I think that we could be looking for more upside because of this important breakout here after completed 5 waves down. So maybe we are even headed back here to the termination point of a previous wave 4. Also another market that I think it's important to track is dollar Chinese yuan. As you know, Chinese yuan and Aussie has a positive correlation, and I can see very nice and strong reversal here, and it looks like that this reversal confirms the end of an ABC rise. So if that's the case, then you know that downside potential is huge, at least in the short term, towards this trend line support. So more weakness on this market suggests that Aussie strength could also resume to much higher prices. Of course, there are not tick by tick correlations, but overall view or correlation is there. Now let's take a look also on dollar CAD. Now dollar CAD is moving aggressively to the downside after it rallied only with 3 waves, but notice that these 3 waves rally actually finished the cycle here close to the previous peak. So I think that this was wave B as part of a complex correction here in wave 4, which could be a flat, maybe even a triangle if it just stays sideways here. However, what is important is that if we take a look on a daily chart, you can count 5 waves down here. Okay, so you are in a 5th wave, meaning that if you are in a 5th wave, you should be aware that sooner or later this market maybe can come to an end. And still, there is obviously room for more downside, because if you connect this Elliott wave channel, okay, these trend lines, so that's the upper line connected from wave 2 and wave 4 peaks, and then you have the parallel trend line putting at the bottom of wave 3, you can see that this projection is actually much lower. So there is room for more weakness, especially if crude oil will continue to the upside. And now looking at the 4-hour chart here, maybe we are in the middle of wave 3 now, so more upside until we complete this wave 5. Now if we turn back above 1.3, make a daily close up there, then I think that reversal is already happening. Now let's take a look also on dollar against Swiss franc. This one has came very nicely out of a triangle. We've been looking for this triangle for a while, and looks like the drop is now in a full force. But again, we are moving out of a triangle. We know that triangles cannot occur in a wave 2, right? So it can occur in a wave B or wave 4 or wave X, and always occurs prior to the final move within a larger trend, meaning that you are now in a final part of this larger trend. Okay, so if that's the case, then again, maybe support is not that far away. You're also at this lower parallel trend line support, okay, of this channel. So let's see what happens down there. Of course, I do not want to say that we are going away from much higher, away from the current support levels until I see a confirmed price action. So what is confirmed price action? Is reaction from the market, is a reaction of the markets from the supports that you are tracking. And also whenever you're looking for an Elliott wave cycles, it's important that you see an impulsive reaction from that levels. So looking here at this wave 5, definitely once I have 5 waves up, only then I will say that low is in. Okay, so until then we should just be aware that even more weakness could be seen here for much more extended lower prices for a 5th wave. Now let's take a look also on, we have gold here. Well, gold came very nicely to the downside. It make a nice pullback from summer highs, and I've been looking for this pullback to be corrective. Recently I also were looking for this retracement towards 1800 and compare it to the retracements that we have seen back in March. Also keep an eye on this 100 daily moving average. Always when you moved slightly below that moving average, market then recovered significantly once it broke back above it. Okay, so that has been the case here in 2019, then at the end of 2019, then back at the start, it was back in April of this year, and now I'm also waiting for similar scenario maybe to occur here, especially if I consider the Elliott wave structure. This also suggests that we could see more upside. I've been looking for this ABC drop back into this support, and looks like that we are seeing a very nice reversal away from this support, and this bounce is looking impulsive here on a smaller time frame. Also, what is important is to keep an eye on this 1850 level. Why? Well, if you think that maybe this correction has finished right there, well, then you would expect that market will continue lower with 5 waves. In such case, this could be now then wave 4, but wave 4 should not step into the territory of a wave 1, which is at 1850. So I think that's a very important price level, which would confirm that yes, a reversal is happening, bottom is in, and that we are headed higher, at least temporary, if not something more longer, towards the upper side of this channel, upper trend line. So be aware of more upside here, and as said, especially because we have this broken trend line and this impulsive rise from that recent lows. Now silver is also, I think, in a corrective movement here. We can count 5 waves up, and this current drop is quite tricky, I must admit, because it's not very clear or simple correction, but I think it's a correction because we have these overlapping structures, and maybe we are dealing with this WXY correction. So we will see how this plays out. Definitely, if that's the case, it's still incomplete, because if we are now finishing this correction with the triangle, you have a few more lags here missing, waves D and wave E. But overall, I think that silver could do much better in the future, either if we see a break higher from here, or maybe even if we just retest 50 and 61.8%. I think that this view or picture should remain the same, correction within uptrend. Now let's take a look also on crude oil. Now crude oil is making a very nice recovery here. It's moving impulsively after market reversed here after wave C. And we've been looking, if you're tracking our analysis, then you know that I've been looking for an ABC drop towards 34 and then expected a reversal. So far this is playing out very nicely with an impulsive price action as shown also here on the 4-hour chart. However, I see prices in a potential in a fifth wave here with an extended fifth. Also, this lower degree cycle has 5 subwaves here. So just be aware that we could be slowing down here for a new 3-wave setback before market may continue even higher. If from any reason we see an aggressive sell-off, if stocks would come aggressively lower, then I think that crude oil would also be seeing weakness. And if that would happen in 5 waves from the top, then of course I would say that wave 1 did not finish here, but rather here, or wave A, and that we are headed for a correction and then a new rise. Also, crude oil has been very useful this year, and not only this year, in the past few years. Whenever we have seen a sharp reversal on crude oil and stock market was still at the high, well, that was an important evidence that something is changing. Okay, it's very important to keep an eye on correlations. Now let's take a look on the S&P 500. Now the S&P 500 here is very bullish, clearly, but I'm tracking 2 wave counts. Now the first wave count is that we are maybe in a wave 5 here, making this throw over formation, so still there can be more upside potential. But the one count that I really love so far is this potential flat correction here in the making. Okay,